Hey everyone, this is a trader investor. This is a video on the broader markets. Today was FOMC minutes. Chairman Powell spoke today at 2 p.m. Eastern Time, 11 a.m. Pacific Time. And what is that event going to do to the broader market? Always, it will do one of two things. As soon as he speaks, it either collapses or the market is happy and it rises. One of these two things happen. So based on this knowledge, when we had an entry today, when we broke below the 15-minute range, and breaking below is not enough because there are some swing lows here. If price retests that, rejects it, and comes back and breaks it a second time, I'm very comfortable entering a position if there's a dollar move for me, right? If there's a dollar move to the next area. If there's no dollar move, I'm not entering it. Now, today being an FOMC minutes day, I'm very reluctant to also take a position that requires me to get that dollar move past the minutes, right? Past the 11 a.m. Pacific time the minutes that comes out, not the time minutes, but the FOMC summary, the minutes that the Chairman Powell mentions. Then for that to come out, I want to be in a position where I will close out my entry at that dollar exit and then continue to watch what happens once the price finds a bottom. You can participate to the upside. Today, the bottom was formed. It went there 3 times. And then when it broke out of that, it was a good reversal entry to the upside, 422 to 423.58, right? So there's a dollar move to the upside. And look how these support and resistance based on yesterday's action, based on last week's action, based on the 15-minute range. I always talk about those. And price, what does it do? It slams down to last week's low and bam, it returns to yesterday's low. This is how it works all the time. And so if you knew that, and at the break of this 3 bars that tested this bottom 3 times, and then at the break above that, if you take it, just be prepared to close your position at least half here and move your stop to break even, and you are at break even at the end of the day. Boom. This was beautiful setup. It cannot be any bit better than this. The setup is really beautiful. It cannot be any better than this. On the downside, I was cautious and I didn't feel like taking the position, knowing that I did not have an exact dollar here. And but the Qs, on the other hand, started strong. Again, 15-minute range on the way. So went up, got rejected. So because of that rejection, I was expecting price to come down, test the 15-minute range high, and continue up. That didn't happen. So the Qs collapsed. At the break of the 15-minute range, was there enough distance to yesterday's low? Definitely not enough distance to yesterday's close because the close was very near. So when price rejects that and comes back and gives you an entry near the 15-minute range low, that's a position to take. This was a beautiful entry, right? This is what I played because in the Qs, it gave me there's a dollar move, and because there's a dollar move, I don't have to wait for FOMC minutes. I can say I can probably get that dollar move. I could be wrong. I might not get it and then I'll get out. But in this instance, it gave me that dollar move. That's why I wanted to point out the Qs right after this discussion here. There's no dollar move. So because there's no dollar move, I need price to come down here, a little bit past it, reject, come back to VWAP or 15-minute range low, and then try another dollar move. There's a lot of time that passes by here. I don't know how much this takes. right? You never know how long this takes. It could take 3 hours to go from, your entry to your exit point. It could be minutes, but because markets are usually more cautious until 11 a.m. FOMC date, I knew this was going to take time. This is why I keep mentioning it. It might take time. So if it takes time, then skip the trade. But if in this case, in Q's case, you have tested it and you have that dollar move. If it takes time to get there and 11 a.m. Pacific time is about to happen, you can close your position. You don't have to fear, because you can close your position. In this instance, it gave us target 1, target 2 never hit, and so once we are at target 1, target 2 is break even for me, and I exit my position, all of my positions before the minutes. So this is how it was set up. So Q was the beautiful entry. IWM, not a dollar space to the upside. It broke 15-minute range, but yesterday's low, yesterday's close was on the way. There was no retest to go back up to try another dollar. On the downside, there's this trend line that is acting as a strong support. As you can see, price came down to it, reversed. This was yesterday's low as well. As soon as it went to yesterday's low, price reversed. It came back down again, price reversed. Now at the FOMC minutes, it really acted wildly, but even that wild move, it closed above the 15-minute range. Not the 15-minute range, closed above yesterday's low. There was one 15-minute bar that closed below it, but it immediately reversed. And so IWM, you see this railroad tracks, not tradable for me when I don't have a clear signal of where to enter to the upside. SPY was the beautiful entry for me for that, because price comes down, it gives 3 tries to break the bottom, you break the top, and it's a clear go. In IWM, there's no clear coming down and I stay up here, because we're staying near the top, right? So all these bars I need to cross here and then try to shoot up, and these highs were first sign of trouble, right? Remember, first sign of trouble. Is there enough distance between breaking? I need to break this line, and when I break this line, is there enough distance to first sign of trouble, right? 90 cents. I don't take those trades for me. That's why SPY was the cleaner shot. In diamonds, on the other hand, usually if I have a position in SPY or Qs, I don't take a position in diamonds. So because of that, there was no play for me. But in the diamonds, when you break the low of yesterday, did you have an entry 342.34 to 341.07? That was a dollar move, so you could have taken this dollar move. And then after the play was done, or before the 11 a.m. Minutes come out, you close your positions. It's not target 1 because it didn't hit. You close your positions. On the reverse side, you could play it. Is there 341 to 342, roughly a dollar, but first sign of trouble is up here, so I don't trade it. Plus, I was in the SPY trade, so there is no need for me to worry about diamonds when I have that set up already. So this is how the markets played out today. Did you take positions out of fear or greed, or did you take positions out of the technicals, and also knowing that there's a major catalyst, FOMC minutes, NFP report that comes out once a month, any major event, earnings, anything like that? Just be watchful, be careful, just be prepared to close positions. If you stay in a position, be willing to lose it all, because price could drastically move against you and all your positions are wiped out if you have options positions. All right, everyone, this is how the markets ended today. I will see you tomorrow in a new video when I analyze the market before they open. Take care for now.